get started. Akshant, I'm going to start by talking to you about the decision on why to IPO. And in the case of Zomato, the decision was on account of COVID. I remember Dipi saying very clearly that it was a desperate contingency plan because COVID had impacted your business so badly that you had no choice but to raise money, and you weren't even worried about the kind of subscription that you would get. So take us through that time on the decision of why IPOing and when you finally decided to go about it.
Yeah, thank you, Shireen. Yeah, so for us, I think it started with that. During COVID, around July 21, our business had shrunk meaningfully in the COVID times, and it was still loss-making. And fundraising from private markets was not an option at that time because no one knew how the world and our business will come out of COVID. And hence, I think that is when, over a lunch break, I remember us talking about, okay, should we go public? Maybe it's easier.
Over a lunch break, you decided, should we go public?
Maybe it's easier.
Is that how things happen at Zomato, over lunch break?
That's how this conversation happened, with like Dipinder asking me that, look, should we go public? Maybe it's easier to raise money from public market investors. And
because the private market had dried up.
Yes. And, of course, there's been no history of, before us, a company like us, which is loss-making, raising money in public markets. So, my first reaction was like, look, this is even going to be harder than raising money from private markets. But I think nevertheless, since we had no option or weren't seeing much traction on the private side, we said, look, let's start the work, let's see where we go. And I think luckily for us, by the time we were prepared to go public, the sentiment had changed, business had bounced back. And in fact, before we went public, we raised a lot of capital from private investors, right? So a lot of things changed. So we don't know, had things not changed, we still don't know whether we would have made it. But yeah, I mean, that's how it started. And I think I'm sure for different companies, triggers are different, right? I think there is no one good reason to go public. It could also be just like it unlocks energy in the organization. That could be a reason to go public as well. But in our case, that was where it started from.
But Alok, let's talk to you because, what we've seen in the case of Zomato, for instance, been around for 15 years and then the decision to actually IPO. In your case, 17 years, you've been around for 17 years and then the decision to IPO. And in fact, the first attempt at IPOing didn't go as per plan. You pulled back and then decided to go ahead when the market sort of came back to some semblance of normalcy.
Yeah, absolutely. So, Shireen, I think one similarity is we attempted to raise a private round back in 2018-19, didn't go as per plan. And we said, look, let's make the company profitable. So we worked for the next 12 months to make the company profitable. First quarter of the 2020 calendar year, just before COVID, we turned profitable and COVID arrived. And, we took a decision saying, look, this is a time when most OTAs are going to play defense. It's time to play offense. And you might remember, but we were refunding people left, right, and center, even though money wasn't coming from airlines.
And you didn't lay off people either.
We didn't lay off anyone. We actually hired more people in the team in our customer support because people are not picking up calls at airlines and OTAs in those days. And we just said, look, if we actually do this right and things do work out, in the worst case, all OTAs are dead anyway. But if things work out, maybe the karma we earn at this point, will come back in a big way. And it did. So when things opened up...
You were accumulating good karma, is it?
When things did open up, FY21 for us was actually bigger than FY20. And in the COVID year, we were profitable. And that gave us immense confidence to say that, look, the future is going to be only better because travel hasn't opened up yet. The second wave had still not arrived. And we said, let's just... start working towards that right away. So I think sometime in February, March 21, we had a board meeting. We just acquired, in fact, we made two acquisitions during COVID, Confirm Ticket and Abhibus. And during that board discussion, we said, perhaps we should go public. And, Zomato's filing was one big inspiration for us as well, saying that, look, this is a time when a lot of companies would not think that going public is what you'd be working on because we were all sitting on Zoom calls and working all day, right? So we did. But we said, it's perhaps the best time, right? And we filed our first filing, back in late 2021. We got probably 6 months delayed because by the time, we got the approval, the market had started correcting, right? And it was not the best time to go. And our numbers were looking better quarter on quarter. So we said, fair enough, let's wait. And for 2 years, we just executed, grew our revenue and profits. We were 6 times of pre-COVID last year. And that's the time when we said, maybe it's time to pull the trigger now.
So karma did work in many ways than one. Alok, let me come to you now. What gave you the confidence at Policy Bazaar, you and Yashish, to actually decide on going IPO?
So our reasons were very different, Shireen. I mean, we didn't need the money per
Yeah.
se. Even on the day of IPO, we had almost 70% of the money that we raised as a private company is still in the bank. But as you rightly mentioned, it's not just about the money raised. It can also be about, sort of signaling to the market that companies come of age. The business model is more established now, so it's become more predictable. It becomes a liquidation event for your investors, for your employees. But I'll just like to add one very different flavor to it because, as founders, and this is not something which a lot of people can appreciate. As founders, this is the only thing we have. It's a 0-1 for founders, right? For investors, it's usually an option. You can sell tomorrow, you can invest in 5 other things, but founders के लिए तो 0-1 ही होता है यार, कुछ है ही नहीं और, right? So if we do not have confidence in the survivability of this model, then we have wasted 15-20 years of our life. So there is no option for founders but to make the business model stronger and stronger with time.
The breadth and the depth of India's startup ecosystem, it's changed dramatically in the last 20 years, as I pointed out. The private sector and the private market enthusiasm has been waning in the last few years, and we've seen that funding winter, which now seems to be much more sort of structural in nature, at least as of now. And then the ability for the public markets to understand and perhaps appreciate new age business models more or better, especially after the likes of Zomato have gone public. What do you attribute to the kind of confidence that we're now seeing in these stories from a Dalal Street perspective?
See, from a market perspective, new age businesses growth is never the question. Everybody knows, whenever any investor invests into India, essentially it's for significant growth. And when you compare new age businesses versus anything else, which we call traditional companies listed, the growth is way superior. The question was always around profitability.
Yeah.
It was a question which was asked until 2022, 2023, that these companies which are growing at this pace, at what stage they will actually deliver profit. And I think once some of the bigger ones, few of them sitting here, have listed and delivered, demonstrated it, I think that's where the whole market appreciation for the businesses have happened. And typically all these cycles start with the larger companies, which are you are more familiar with, right? Even whether it's Zomato or Policy Bazaar, even before listed, you are familiar with what the company is. So once that has happened, then it sort of trickled down to the smaller businesses also, so that you have a very solid business plan. Now, whether you're on a consumer side or enterprise side, people believe that, okay, these businesses at certain point in times can become profitable.
And will deliver returns.
And they will deliver. So that confidence has come back, and it's not them, other companies also have
pricing.
listed.
Pricing has made a
Absolutely.
big difference in terms of how these issues are being priced today.
Yes. So obviously, see, when you are only looking at growth at that point of time, the matrices used to be different. When bottom line starts happening, you like it or not, people start looking at the bottom line numbers, which is EBITDA and all these days, right? That's the change of thought. But I think importantly, markets, if you see in terms of the absolute valuation perspective, it is still very strong. So it's not as if that you change so the valuation comes off. It's just that you are getting a very different multiple which you trade at, which most other businesses don't get in the country. So I think markets' ability to understand that a lot of these businesses have serious value, and these businesses are going to last for much longer than what you would have thought pre-COVID is really the confidence booster which is there. And obviously you have phenomenal liquidity in the domestic market. So everybody, whether somebody was invested in an unlisted security or the mutual fund, everybody has got that confidence. So you're going to see more and more of this happening.
So 2024, an even bigger blockbuster year in terms of IPOs?
Next 12 months more than what you have seen in the last 12 months, for sure.
For sure. Well, let's talk about how life has changed now as far as all of you post an IPO. And Akshant, I'm going to start by talking to you. As Kunur was pointing out, as far as the private markets were concerned, GMV was enough, and now suddenly you have to talk about EBITDA, and that becomes the metric that is going to be most watched and most scrutinized. Now, it took you, how many quarters? I was taking a look at that time to profit since listing, about 8 quarters. What did you do differently? Because we've also gone through this mindset, especially through the private market boom, where easy money was easy to come by, where nobody was talking about profitability. It was growth at any cost. Suddenly, you're now talking about growth and profitability. For that mindset shift to happen, for that change and that transition to take place, what were some of the tough decisions that had to be taken on the back end?
So I think in our case, it wasn't that because we became public, we had to shift focus on profitability. In fact, when we went public, we were a loss-making business with very little visibility on profitability, and that's how we sold our IPO to public market investors. And I think they were pretty okay with the profile of our business, the way it was. Right? So I think in our case, the business matured in those 2-3 years to a point where it became profitable, right? And given that, business like ours are usually new businesses and people don't know how, at what point they mature. Even we were not sure of how long it will take to get to that point, right? And it happened in 2 years after IPO, but I don't think
But
for
was
us,
that pressure, for instance, to ensure that you move faster to profitability as opposed to had you not listed?
No, I don't think so. I think public market investors want and appreciate clarity, right, on how they should think about this business in the next 3, 4, 5 years. And as long as you're transparent and you give that direction and clarity, right, they're willing to underwrite the business basis that information, right? So I don't think in our case it was like because we were public, we had to get to profitability. I think we just sort of focused on keep doing the business, and I think it got to a point where it started becoming profitable.
So again, it was a natural progression. You're saying
Yes.
it wasn't anything specific that you decided to do after listing to turn profitable easier, faster.
That's right, and same is true for the other business that we acquired, Blinkit, right?
Blinkit,
it
yeah.
was a loss-making business which we acquired while we were public, right? And we got.
And there was a lot of backlash.
I mean, I think backlash is more in media. That transaction required a shareholder approval, and we got 98% of our shareholders to vote for it, right? So, I think a lot of this perception around, backlash is also, I think, basis what you read in the press. But I think shareholders were supportive. They were, skeptical of how this business will shape up when the food delivery business itself was still young, right? But if you look at that journey now, that business also matured way in much shorter time than what it took food delivery to get to that point.
Even
Yes.
ahead of your own expectations.
Yes. So I think we are all in businesses like these, right, where you're trying to disrupt the status quo, and when you're doing that while being public, it's going to be slightly hard to make the business predictable, and I think that doesn't change now. That doesn't change 2 years out. I think that will be the nature of this kind of business. But I think.
But you're saying that there is an appreciation and an understanding of the unpredictability of the bets that you make as long as you're transparent
Yes.
in communication, but you also have the track record of execution.
That of course helps any business. I think with time people will, underwrite. When you underwrite a business, you're also underwriting the management team, and therefore track record over time helps, right? But I think key is communication, right? Because on how clearly are you communicating, and making sure that you as a company is leading the narrative on your business rather than people conjecturing on what it could be. Given that our
Yeah.
businesses could take many paths,